Welcome to the Fear and Greed Daily interview. I'm Sean Aylmer. It's not a bad time to be a tradie in Australia. Tradespeople of all varieties are inundated with work, but at the same time, they're dealing with rising prices, supply chain problems, and the frustrations of would-be clients impatient about delays. We've spoken previously to Roby Sharon-Zipser, the founder and CEO of Hipages. If you've ever watched The Block, you've probably heard of Hipages, the ASX-listed marketplace for tradies. It's a company that knows exactly what's going on in the industry because they've got access to all the data. Robbie, welcome back to Fear and Greed.
Hi, Sean. Thanks for having me.
Now, look, before we get into the state of the industry, for those who didn't hear our chat last year, just take me through the Hipages business model where tradies pay a regular fee to get access to job leads.
Yeah, so what we do is it's pretty simple. If you have a need for a trade or a trade service or anything around the home that needs improving, anything from cleaning services all the way through to an extension or an addition or even potentially a new home, you would go onto the Hipages platform, Hipages app. You can download it from the App Store and you put in your details and we'll connect you with up to 3 trades that will quote on the job that you want to get done. Really that simple. More recently, and I gather we'll probably talk to it shortly, we've also introduced some technology to make trades better business operators. So we're moving into the SaaS world.
Okay, so before we get into that, what are you seeing in the industry at the moment? Now, this is very close to home for me, literally, because we're about to renovate and I am worried about finding tradies or the builder finding tradies because of all the stories we read about.
Yeah, it's been an interesting year overall. Like if I look at the last 12, when I say year, I'll probably refer to financial year. So let's look at the last 12 months. It's been a bit of a roller coaster ride with trade. So you have this situation where the Delta outbreak with COVID happens and, it seems like we've all forgotten about that, but that was too long ago. And you have LGAs all locked down and trades literally can't work. And interestingly enough, a lot of the trades that are on our platform are in those LGAs where they had the restrictions, particularly for trades. So
these are the local government areas, particularly in Western Sydney.
Yeah, Western Sydney, and there were parts of Queensland and South Australia that had restrictions. So other parts were different. I mean, Victoria and Melbourne in particular had more severe lockdowns and restrictions. But, these are important areas for our platform and the marketplace in Australia. And people that live in those areas, they go out and service the broader cities and things like that. And there are a lot of trades there. So you have not a lot of work coming into the platform. And also people are a bit nervous to get trades.
Yeah.
Then you move into October, November, which is typically the busiest time of the year for trade services because everyone wants to get everything done before Christmas. And then what happens is you have the build-up of the work that people couldn't get done along with the busiest time, which is the normal cycle. So it's a doubling up. And so you have this issue where the availability of trade services is really limited. What then happens in February and March, as we all know, is we get hit by storms, really big storms that go on for about 4 or 5 weeks in parts of the east coast of Australia, certainly in New South Wales and Queensland, very severely affected, which then puts a big pressure on trade services. On top of that, we've got supply constraints for raw materials. So a lot of the trades, when they do their work, 30 to 40% of their cost is in materials. So that's going to result in a real constraint in the ability for trades to actually complete work in the timeliness that they used to, which was already under a bit of pressure. But then also you're going to see inflation, as you opened with. There's just supply and demand economic equations kick in here, and you see prices and delays kick in. So what we're seeing though now is that it's starting to come to balance. Actually, some of the inflation and then the impact of inflation resulting in the foreseeable future seeing some more interest rates coming in, we're starting to see that demand starting to ease as the trades start to work through that workload. And then, people are sort of saying, hang on a second, what's going on? Things are getting a bit more expensive than I originally thought. So we're starting to see that ease up a bit. And that's certainly what we're seeing in May. And we're projecting a little bit of that in June, and certainly some of the economic data that we're looking at. As we see more interest rates come through, we'll see a little bit more balancing of the marketplace happening for trade services.
Okay, so in short, as we head into the next financial year and towards the end of the 2022 calendar year, hopefully it might be easier to get a tradie.
I think if we're seeing inflation where it's at and then interest rates coming in, I think the workload is getting caught up. It's been a really turbulent last 12 months. I just think, how much more can we take? I think it's got to settle, right? So I'm looking more optimistically about the next 12 months about what's happening, and you can feel it. You can see it in the data, as you said earlier, that there's some really nice green shoots coming through here where things are starting to return to balance.
Stay with me, Robbie. We'll be back in a minute. My guest today is Roby Sharon-Zipser, founder and CEO of Hipages. Okay, now Hipages, your business has been expanding as well. Since we last spoke, you've acquired software platform Bricks Plus Agent and the New Zealand tradie directory Builders Crack. Yes, that is the name.
Yeah. Well, if it's easier, I don't know if it's offensive to anyone, but we'll just call it BC. But it is a good name, and it's very, very good for the New Zealand market where they've got really strong awareness. I think we'll just clarify a couple of things. So we've actually got three things going on. One of them is our software as a service product, which is Tradie Core. So that's a fully acquired business that we did that acquisition a couple of years ago, and that's rolled out. That's technology to help trades better schedule, quote, invoice, integrate with accounting, accept payments. That's a product that we've built and we're rolling out as we speak. We actually did a 25% investment. We didn't acquire Bricks and Agents. We have a meaningful, significant influence in that business, but we're not.
Right.
We don't own it. But we did acquire Builders Crack, which is the tradie marketplace, the number one tradie marketplace in New Zealand, which makes Hipages the number one marketplace for trade services in Australia and New Zealand. So it's very similar to Hipages, very specialised in home improvements and home services, servicing the trade economy. They don't really call it tradie in New Zealand. Becoming more familiar as it does, as some of the Australian stuff influenced the New Zealand market. But yeah, very, very similar business to Hipages.
Okay, and they're going well?
Yeah, look, we were quite well capitalized when we came out of our IPO. And one of the things that we said in our prospectus is that we would be looking for inorganic opportunities, so M&A opportunities. And the things that we looked at were some of the international players, some domestic stuff. And we actually landed on the investment in Bricks and Agent and the acquisition in Builders Crack. And the reason why we landed on that investment was the profile of the business in terms of their growth rates, their profitability was very similar to Hipages, and it was an opportunistic acquisition in that the timing was right, in that the founders of that business were ready to be part of a bigger group, which was Hipages, and so we made that acquisition.
Okay, now in terms of your share price, it hasn't had a great run this year. What's behind all that?
That is disappointing to see the share price being where it's at. When you look at the fundamentals of the Hipages business, it's strong. We were able to achieve growth in a very difficult market. We did exactly what we said we would do from our prospectus, like we delivered on our forecasts for FY21. 22 growth was a little bit slower due to the issues that I raised. It's sort of a bit counter-cyclical in that when trades are really busy, the core product that we offer is less of a need. And maybe the market's reading into that. However, I would say it's really important to call out, because I actually just did this communication internally for the business, is that when you look at the macro environment, technology stocks globally, domestically have had a bit of a hard time in the last 3 to 4 months, last 6 months, I would say. And that's because, and this is the explanation, it was written, I think, in one of the main publications, technology businesses are driven by growth, or their valuations are driven by growth, but they also have the need for capital. And when the cost of capital goes up, it makes it harder to achieve that growth rate. And so therefore it drives into a negative impact on valuations. I mean, that's the simplest way to explain it. Yeah. And so one of the things I did is I scoured the earth looking for examples, and it's hard to find a technology company that has not been impacted. Even Atlassian, for example, is down 60% from 6 months ago. So, everyone's familiar with Atlassian, and then that's a great business, great technology company, unbelievable success story. And even they are at 60% down on their valuations from 6 months ago, which is exactly where Hipages is at.
Yeah, right.
And I think to maybe put a little bit more detail into that, what we'll see in technology stocks, in particular in Australia, US, globally, is that businesses that actually have operating free cash flows that are still managing to be able to deliver growth but profitability, and then ultimately real net positive cash flow, they're the real winners, because it's easy to grow because you're just spending money to grow, right? But it's also harder to achieve a real sustainable business that's generating free cash flows, then ultimately will be paying some sort of dividends. I think that's directionally where Hipages is going. I think that's where real quality technology companies are coming out and differentiating themselves from the companies that are just burning cash.
Okay, finally, Robbie, we've got a new federal government. What do you think the Albanese government needs to do to support domestic industry? And in this case, obviously the trades, but the building industry. Do you think policy settings are okay at the moment?
Yeah, so let's cover off some of the top 3 key policies that impact the trade industry, and then I can give you my views on what more could be done. Yep. I've always got a view, as you know. So I think
we got you on, Robbie. It's why we got you on.
So one of my views is going to be quite controversial, but I'm happy to share it. And there's real basis, personal basis behind it. But let's talk about the policies that they've got. So giving tradies more security. So they're going to legislate some secure work as part of the Fair Work Act, reduce the number of consecutive fixed term contracts. So that's where people get a lot of subcontractors. They don't really get the full rights of a full-time employee, where a lot of trades actually really are technically full-time employees. I think that's pretty good. Gives more security for trade. So I think that's a good policy. The other policy that they're going to roll out, and I hope they will be able to get through, is to create more jobs. So 1 in 10 tradespeople on government projects will be an apprentice. I think there's a real shortage of skills in this space. It's actually becoming quite lucrative. I think people that traditionally thought they had to go to university and become a doctor, a lawyer, accountant, or some sort of qualification, I don't think that's the case anymore. I think there's really good opportunities in the trade space where it's really fulfilling work, where you accomplish a lot, you're actually making a difference, adding value to life in general. So I think that's a really strong policy to encourage more people to go in and become an apprentice and support businesses that are doing apprenticeships.
Totally agree.
And then I think making education more accessible. So again, right at the beginning, even before the apprenticeship, these people that want to learn a vocation such as a trade, making TAFE free or subsidised. I think that's one of the other policies that we saw coming up. So Labor will set up, I think we read 465,000 fee-free TAFE places for Australian students studying in industries with skills shortages, including 45,000 new places. That's a really good policy. I think that's long-term thinking, and I'd back that any day of the week. If I was to go into what more we can do, probably my top 3 things is I would definitely be opening up the borders for skilled migrants. And I don't know if that sits in line with any of the party's policies, but I just look at countries around the world that did open up their borders, the US, even Australia in its history, when it opened it up for skilled migrants or for migrants that have the ability to pick up some of these trade services, it really fills the skill shortage. You've got a real hunger to be successful. My parents immigrated to Australia. I was born in Australia, but there is something about the tenacity, the hunger to, make a better life. And I think these are really good opportunities for people to fill. So again, it could be controversial, but, those are my views. I also think incentives for trades to do more residential work. I don't know if it's more tax benefits, some of the stuff that was coming out of the coalition's policies around technology subsidies to make trades or skilled workers more productive. I thought that was a good policy. I know it's another party, it's not the winning party, but that was actually a good policy. I just think it should be looked at. To make people more efficient and productive is always good. And then I think the third one, which is an interesting one, is what we've noticed is I think Australia is prone for natural disasters. It's either a bushfire season or there's floods. And I think in order to get trade, and you always need trades to come in and do the cleanup and repairs and, reestablish connections and make things work again, possibly having some sort of natural disaster incentive for trades if they are giving up normal stuff. I don't know the mechanics of how that would work, but it was it was a thought bubble, and that, how can we get, instead of relying on the defence, which has other responsibilities to protect the national interest, why can't we use our own National Guard, I guess, of trades to, make things safe and healthy for, obviously, if it's not life-threatening, but these skilled people to do the cleanup and help them subsidise in those times when we do need them, which isn't every year, although it has felt like every year. But
it does feel that way.
They are more recurring. Yeah.
Robbie, thank you for talking to Fear and Greed.
Pleasure.
That was Roby Sharon-Zipser, founder and CEO of Hipages. This is a Fear and Greed daily interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.